Coverage here from the World Economic Forum in Davos, and joining us now is Sumant Sinha. Sumant, appreciate you joining us here on CNBC TV 18. You did a session here with Al Gore talking about the need for more proactive action to deal with climate change, and that has been the theme here, not just this year at Davos, but for the last many years. How confident do you feel, given the current political climate globally, that this is even an issue that's being taken seriously?
Yeah, there's a real paradox here, Shireen. Because on the one hand, the World Economic Forum for the last 4 years has identified climate change as being the number one global risk. So that's on the one hand. On the other hand, clearly not enough is being done to address climate change. So you can almost say that there's a lot of talk, but not enough action. And I think all the work that has been done so far, all the studies that have been done and all the projections that have been done indicate that if we carry on as we are right now, with all the Paris Agreement and everything else that we are putting in place on a global basis, that is certainly not going to be enough. Unfortunately, what we have here is a situation where the largest economy in the world, i.e. the US, is essentially has withdrawn from the Paris Agreement or is about to withdraw. The rest of the world is not doing enough. I think countries like India and China as well, to some extent, are trying to put their best foot forward. But I think when you add up all of these different initiatives that have been taken across the world, I think it's putting us on a path to a temperature increase of almost 3.5 to 4 degrees centigrade by the end of the century. And as we all know, we have to keep that limited to less than 2 degrees centigrade. So we are well away from the path and the trajectory that we actually need to be on in terms of carbon emissions. And that's a really worrisome factor. And, I've gone to a lot of these sorts of forums and there's a lot of talk. But I think we just need to do a lot more. Somehow or the other, that is missing in action.
Well, speaking of action, let's talk about what's happening in India. And, we had a conversation a few weeks ago, where the industry has sort of been in dialogue and discussion with the government to try and sort out some of the pending issues, largely around tariff and caps and so on and so forth. Where do things currently stand? Has there been any headway, any progress made?
I think the dialogue is continuing, and that in itself is healthy. I think that as you see future bids coming up, my optimism or my hope is that some of these conversations would result in tariff caps or tariff reserve prices that are hopefully a little bit higher, and higher just to take into account the higher cost of interest, higher cost of capital, that is, as well as the fact that the rupee is depreciated. So really taking those factors into account. So I think that will begin to reflect itself in some of the bids that happen. I think MNRE certainly is open to listening to us, and it's just that we haven't had a bid so far. I think once the bids start coming in...
Well, 2019 you have quite a few lined up.
There are quite a few lined up, but it's just that the first few bids haven't showed up yet. I think when those come in, I'm hopeful that we'll see some of those discussions resulting in positive changes.
In terms of the bids that come up in 2019, what kind of appetite do you have if, in fact, the reserve prices are moved higher, or if they remain where they are?
I think, Shireen, our appetite, and when I say our, I mean Renew Power's appetite, certainly is very large. And it's not just us. I think other people in the industry would also be able to do quite a bit. I think the reason is that there is a lot of capital that is willing to invest in India. And so therefore for us, the issue is not how much we can do, because our ability to execute is there, the ability to raise capital is there. It is just a question of, can we get projects at the right price? There are enough projects out there as well. So it's just that little price piece that needs to be fixed. Once that is done, then I can tell you that the appetite of the industry is really very high.
What would be the triggers for the sector outside of course, what we see as far as pricing is concerned? What about the ECB changes that have happened? How does that impact the industry, for instance?
Somewhat, not hugely. I think what has happened is that we're now allowed to borrow at shorter tenors of up to 3 years. What has not changed is actually the price cap there as well, imposed by the RBI, and that therefore becomes a limiting factor as to how much you can borrow and so on. So I think ultimately I think it's the Indian, and I'm sure there are good reasons for this. Sometimes I fail to understand them, but I think it's the Indian governance mechanisms desire to keep tinkering, with a little cap here, a little cap there, whether it's on interest rates, whether it's on bids and so on. And that is something that I find very strange. Sometimes you just have to let the markets do their work as well. And I understand that markets very often don't work as well, but sometimes they do as well. I think that confidence and that faith on the part of the government certainly needs to be there, that the private sector can manage its affairs as well. And so if that means that we have to pay a little bit higher to borrow overseas, let us do that, especially at a time when the rupee is not so strong, and especially at a time when Indian banks are not doing so well. So this I don't want to use the word fixation, but I am using it, with tinkering is something that I think just pervades the Indian governance framework.
So I'll end then by asking you, since you said that there should be more allowance for the market to determine which way it's headed. The concern, and I asked you this previously as well, the concern is that are we looking at another power kind of situation here, thermal, and the perils that it's gone through and the NPA cycle that it's gotten itself fixed into. Is that at all a worry today?
I think it is a worry to a smallish extent, and the reason I say that is because we've had the example of the thermal sector, and that's been a little bit salutary for all of us, because in some ways that has been a lesson of what not to do. And it's not just the thermal sector, it's also happened in some other sectors as well. And there is this Indian propensity, the Indian promoter / private sector propensity to bid very aggressively. And sometimes, therefore, we do end up getting ourselves into trouble. And I think there will be some issues and instances like that also in our sector. But there is a fundamental difference in our sector, which is that, when you bid for a project, it's unlikely that you will not be able to build the project. You will build it, you may get lower returns in it. That's all. But it won't happen that you build an asset and it gets stranded, because you have the PPA, and you can typically get debt financing as well behind it. You may not make the kind of equity returns that you wanted to make, but once the project is up and running, it will continue to service debt for a long period of time because you have 25-year PPAs. So to that extent, we won't get into the same kind of jam that we got into, or problems that we got into in the thermal space, where there were large amounts of stranded assets with no fuel linkage, no offtake and so on. That kind of thing will not happen. But yes, there will be instances where a few projects will not give the kind of returns that they were supposed to, and some companies will not be able to execute on their projects.
Well, Sumant, always a pleasure. Appreciate you joining us here on CNBC TV 18, and we wish you the very best of luck.
Thank you, Shri.